This is Tammy Burkhardt, and I'm going to talk about Chapter 2. We're going to talk about journal entries. I know the chapter for Chapter 2 actually is analyzing transactions, but I really like to call it the journal entry chapter. It really shows where the process starts with accounting, and journal entry is the very first step in the accounting process. So to start, I wanted to give you kind of some formatting descriptions first. So if you've got like a piece of paper, so I wrote a piece of paper here, I'm going to do these sample transactions. But just to start, you're always going to want to start in the margin, right, with the date. So the date goes first. Now we don't have dates for these sample transactions, which is fine. We can just label them by their number or by the letter if you have that in a future homework problem. But the debit always goes first and always up against the left margin. So once again, the debit is always first and always up against the left margin. And then the dollar sign would follow. So let's just say the debit is going to be for $100. It would go there. You don't need to put the dollar sign there. I just am showing you that's where the dollar amount would go. The credit is always second and slightly indented. So a credit would go here. And then also the credit would be indented as well. So that's how you know that this is going to be the debit side and this is going to be the credit side. And then underneath you would do an explanation. Now I don't do a lot of explanations. The homework doesn't require a lot of explanations, but you'll see when you read through the book that each journal entry always has an explanation, and the explanation goes down here. And that's just simply telling what happened in the transaction. But since you're given the transaction explanation at the beginning, there's really no need to retype that out or re-put that into your homework module. Okay, so once we understand kind of the formatting on how a debit and credit would go in the journal or in the homework module, the next thing you're going to want to know is the transaction steps that were given in Chapter 1, and they always start with the accounting equation. So the accounting equation, as you remember from Chapter 1, is assets equals liabilities plus equity. And once you get to equity, there are going to be three extensions to equity. One for revenue, one for expense, and one for dividends. Okay? So when you deal with the transactions, remember in Chapter 1, you always were adding or subtracting based on the equal sign and what category each account went into. And you started memorizing what accounts went where. So what type of accounts were assets, what type of accounts were liabilities, equity accounts, expense accounts, revenue accounts, that sort of thing. So now when you jump to Chapter 3 and we start using those transactions and put it into the journal in the form of a journal entry, you're going to need Exhibit 3. It's on page 63. So depending on if you have a physical book or you're using the ebook, I'm going to write down both the page number. It's page 63. It's also exhibit number 3. And so that's what you're going to use as kind of your cheat sheet or tool for journal entries. So for instance, in this first transaction, it says purchase supplies for cash. Well, you're going to need to know what type of an account supplies is and what type of an account cash is first, before you try to put it into the journal. So we know from Chapter 1 that both supplies is an asset as well as cash is an asset, okay? And so once we have memorized like where the accounts go, then we need to use page 63 and exhibit number 3, and that will tell us, I'm just looking down at it now in the book, for an asset account, which both of these are assets, you debit to increase an asset and you credit to decrease an asset. I'll say that one more time. You debit to increase an asset and you credit to decrease an asset. So then we need to know, what's going up, what's going down. Well, let's read the transaction. Purchase supplies for cash. So supplies is the asset that went up. So using page 63, exhibit 3, you'll see that, we'll just title this number 1, we don't have the date, that supplies is an asset that went up by $200. So supplies is the asset, it increased. So because it increased, we can purchase more supplies, that's a debit. So it's listed first, it's all the way left margin. The second part of that journal entry is how you paid for it. In this case, you paid cash. So cash, an asset, went down. So because cash went down, Exhibit 3 on page 63 shows you that you credit to decrease an asset. So I'm going to credit cash for $200, and that is our journal entry. We're not going to do the explanation. We're just going to go on to the next journal entry. So in doing that, we'll write number 2 here. We'll go back to the transactions. In this case, it was paid rent on building for $500. So this is a little bit more, we've got to do a little bit more detective work here. So what type of an account is rent? Rent is an expense. It's an expense of doing business. If you own a business and you pay rent on either your equipment or in the building that you're leasing for your business, that's an expense. An expense is always debited. So we debit to increase an expense. If you look on Exhibit 3 on page 63, it says debit to increase an expense. So I'm going to come over here, I'm going to write rent expense. The amount is $500, and that's going to be our debit. Again, using what we know about the accounts, and then also using exhibit number 3. All right, so we paid rent. What's the other part of the journal entry? Well, paid automatically means that we paid cash. So it doesn't specifically say that we paid cash, but by using the word paid, that automatically means that cash goes down. So because of that, we're going to credit cash over here, just like we did before. We credit to decrease cash. So when we pay our landlord rent, obviously our cash is going down. So we're going to debit to increase the expense, credit to decrease cash. Moving on. We got those 2 done. All right, now we're going to do paid salaries. So this one's a lot like number 2, in that we're using the word paid. So we know cash is going to go down, the asset is going to go down. And salaries, what type of an account is salaries? Salaries, like rent, is an expense of doing business. We pay our employees as part of our business. So we're going to come over here, write number 3, since we don't have a date. Salaries expense. And we paid them $300, and we credit cash for $300. So once again, we're using our knowledge of the types of accounts that we learned in Chapter 1, as well as how assets and liabilities and equity accounts are increased and decreased using the debit and the credit system. All right, moving on. Purchased equipment on account. All right, so in this case, we purchased equipment. So equipment is going to be our first account, and that equipment is an asset. So our equipment went up. If we went and purchased something, that means we have more equipment today than we did yesterday. So we'll come over here. We have to debit to increase an asset. So I'm going to debit equipment. The equipment amount was $1,000. And it didn't say that we paid. It didn't say we paid cash like up here. It didn't say that we paid anything. Actually, it said we put it on account. So when we go and buy something, we put something on account, that's going to be an accounts payable to us, right? We owe that amount. We're not paying this business that we're getting this piece of equipment right now. We're putting it on an account to pay later. So that account is going to be an accounts payable, which is a liability to us. We owe that amount. So because of that, that's a liability. You look at Exhibit 3 on page 63. Under liability, it said, how do you increase a liability? You increase a liability by crediting. So I'm going to come over here, indent, I'm going to write accounts payable for the $1,000. Now some of you might be thinking, wait a minute, that's different. We're debiting an asset to increase and crediting a liability to increase. That's actually accurate. If you look on page 63, you'll see that to increase an asset, you debit, but to increase a liability, you credit. Why? Because they're on opposite side of the equal sign, okay? So it's a process of understanding the debit and credit entry system. Also, it's a process of memorizing how to increase and decrease each of these 6 accounts. Good thing there's only 6, right? So you just have to memorize how to increase and decrease 6 different types of accounts. You can do it. All right, 4, almost done. 5, completed services for customers for $750. All right, so completed services, that means we actually did some work. And so we did some work, we completed whatever service it was, and so we need to account for that we completed a job, okay? So what's it called when we do work for customers? That's called earning revenue, okay? Page 63, Exhibit 3, if you look under revenue, it says, how do I increase revenue? You credit to increase revenue. So I'm going to come over here and put under number 5 that I'm going to increase service revenue by crediting. Now some of you might be thinking, wait, you did the credit first. Yes, I did the credit first. You want to do what you know first. And so in this transaction, I said, okay, completed services. I completed something. I finished something. I finished a job. That's revenue. How do I account for revenue? I credit to increase revenue. So now I need to go back and figure out what the debit is, okay? So it doesn't say that we received money from our customer. It simply says that we completed the services, which likely meant that we billed them. We sent them an invoice for the service that we completed. So if we sent them an invoice, that means that they owe us. So what's it called when a customer owes us? That's actually called an accounts receivable. An accounts receivable is an asset, okay? How do I increase an asset? We know that from this last one. How do I increase an asset? I debit. Debit to increase an asset. I'm going to debit to increase accounts receivable for $750. Okay? All right, so let's review that one more time because this one was a little bit more tricky. This is our last one. So we completed services for customers, $750. We know that we completed a service. We know that that's called revenue. When we've completed something, we've done a job. I know that I credit to increase revenue. It doesn't give any indication that I received any money, so likely I billed them. And so I put them on accounts receivable. Accounts receivable is an asset to us. I debit to increase an asset, and therefore my debit is to accounts receivable for $750. So that's just a quick summary of 5 transactions, how we use the debit and credit system. And so, you've got several, probably a few dozen to do for homework, but you can do it. I have faith in you. Have a great day. Bye.